Gonna wait for a few people. Let's see. All right. All right. Guys, what's up? Thanks for joining. I'm gonna wait a couple minutes here. Um, I am gonna be going over quite a few charts. For anyone interested, let me know if you're in the chat. I'm still trying to make sure that I got the YouTube set up correctly. I'm not sure if I do. Looks like Colin. Hey, what's up, Colin? Morning from Singapore. Oh wow, awesome. Wonder what time is it in Singapore right now? Thanks for tuning in, man. Cool to see people tuning in. Colin is asking, gold will continue to go down? Oh, let's take a look. What's happening right now? Well, that's interesting. The chart I have for gold that I drew a while ago is showing a rejection right at, oh wow, so it's 10:36 a.m. Oh, that's not bad. So you're exactly 12 hours ahead of Eastern time. It's pretty easy to remember. Yeah, so gold. I love that I have the chart already drawn for it. Um, Give me a second to talk about that one. I want to see if I posted that on X. I think I did. Probably be good to give people an update. GLDX monthly chart. Yeah, actually I might do an update on X. Well, if you guys have not subscribed to the channel already, do so and turn on notifications. I have not gotten on here a whole lot. I think I have three videos up on YouTube. Um, when I do go live, sometimes it's random. I don't really have a schedule for that because I'm focused on the Discord at the moment and trading during the day. Primarily my schedule during the day, 8:30 a.m. Eastern time, I start charting and I begin pre-market stream in the Discord. And then I stream till about noon for lunch, take a break, then I come back for power hour. It's kind of the general schedule. Um, but as far as YouTube and stuff, not sure if I'm gonna start doing it more or not. I might. I just might. Got to make sure I'm having fun with it though. So I'm also trying to figure it out too. Trying to figure out, how exactly does this work? Making sure that I'm able to read the chat in real time. So you guys commenting in the chat helps me see that, yeah, we got people in here, got people asking questions. People can see my chart, see what's going on, hear my voice. I'm guessing you can hear my voice just fine. It's kind of, I'm kind of torn between streaming on X, streaming on YouTube. I'm doing stuff on the Discord. I mean, it gets busy. It gets busy. I do like teaching. I just gotta make sure I get some balance though. I don't trade so that I can work full time. I trade so that I can actually enjoy my time. So any moment that I do get on, I think it'll be helpful you guys have your notifications on for that. I know on X it can get busy because I post a lot of stuff and it's probably a lot of notifications, but YouTube, if you see me post on YouTube, if you see a live stream up on YouTube, that's the real deal. I would keep YouTube notifications on, because I won't be posting tons of charts or anything on the YouTube post, but I will be live streaming. So if I do post something on YouTube, it's it's gonna be kind of sporadic. I know I'm charting at like 10:40 at night. I got a bunch of energy right now. I just led a entire Bible study thing tonight with my group, so I'm all kind of amped up from teaching that tonight, which is kind of cool. And I can't quite turn my brain off, so I'm gonna do this so my brain turns off. It'll turn off pretty good though. Normally Wednesdays I'm always like this. So Wednesday evenings when I get back from the church stuff I do, there might be likelihood of me coming on. So with that being said, in the future, let me know on my X account, or let me know on YouTube in the comments, if there's certain days, certain times that I think work well for everyone. I know people are all over the country, all over the place. I think for me, what I might try to do is maybe do a YouTube stream once a week, start out with that, and then maybe I might do an X stream even. That way I can start bringing more people to the YouTube channel too, which would make sense. And then as far as the Discord, all are welcome to the Discord. There's a free part of the Discord. There's also a paid part. That's the pre-market group where I'm streaming all day. I'm charting in that group. So people with chart requests and stuff, those that want instant access to those, that's the best place to get a hold of me. I have all my DMs turned off on X, just to clear the clutter. X for me is like my journal. I put my ideas, put my posts, and not focus on. Oh, what's up, Joe? Good to see you, man. Thanks for checking in. Awesome to see you guys. Yeah, and one way you can support this channel and everything I do is share what I'm doing. Um, if you like a chart, like that, share it. And then YouTube and stuff, as I get these things going, as I start getting more of a routine, a schedule, I'm probably going to put that schedule out somewhere. I'll probably start up with my X account and throw that schedule up there so people know, what's going on. As of right now, though, looking at gold, GLD, I'm on the monthly chart. Currently, I have an ABCD pattern. And so far, so good. My projection was to the 2.24 target. That's based off the retracement we had starting back in 2016, drawn up to 2020, and then the pullback into 2022 for gold. We projected to the primary target 248.86. We came up short of that. We hit 247.31. We're within just over $1 from our target, and we're finally pulling back. And I have a 38% retracement down to 211. Will we go there? I don't know. We could. Doesn't mean we will, but we certainly could. What I do know is that gold is making good progress. And I just posted that onto X so that you guys can see. All right. What do we got here? B Crook 718. Hey, it's Bry here to support you. Long time no time. Bry, what's up, man? So good to see you. Thanks for joining. Thanks for supporting. Miss you, man. I hope trading's going well for you. I hope life's going well for you too. Always enjoyed having you in the Discord. It's good to see some familiar faces. I'm gonna go through some charts tonight. As I'm going through charts. Please let me know if you got questions about what I'm talking about. Let me know if if you got chart requests, feel free to let me know too. Try to limit it to, one or two tops, and I'll make sure I get to those, especially towards the middle, towards the end. Look at those. But what I do want to look at, what I want to talk about with you guys, I wish I could talk to more people about this. I know in my Discord I can get a few people. I know on X, if I schedule out like a live stream, it's helpful. Um, and can get more people. But what I do want to share is just my overall market outlook given the current circumstances. There's some similarities to '07 from a technical standpoint. There's some things I'm looking at separately from '07 that are totally isolated and separate in nature, that are, maybe different this time around, or just something to pay attention. Um, and so I'm going to mention those things here. I'm going to put out one more post on X, one more reminder. Macro outlook, the stock market going into CPI tomorrow and the end of October into earnings. All right. Cool. Concurrent viewers. Concurrent viewers. I wonder what concurrent. Interesting. Yeah, I'm getting used to this YouTube thing. This is way different. I'm using OBS, which is helping me record stuff, put some graphics together, real basic stuff. As you can tell, I have kind of quickly put this stuff together. I got some basic info down there. If you don't follow me on X already, do so. Subscribe to the YouTube channel, and then I do have an Instagram page that over time I'm going to start doing some smaller clips and posting onto that. Mostly just like much smaller isolated clips. That'll be the idea of that. My goal is to try to put together a format where I can do like a chart analysis that's like less than a minute long, like 30 seconds to a minute, and be like boom, 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 this, that, and then maybe provide a link to one of the streams or something like that. But let's check this out. So one thing I do want to pull up, let's do 2 charts up and down. Let's do SPX. And what do we got there? The weekly chart. How about that? So I'm going to put SPX side by side with itself from '07 and today, just to kind of point out some similarities I find interesting. All right. So what is that date right there? That's '07. This is 2024. Aaron, we're also going to be looking at things like DXY, the US dollar. Where is that rate cut? That was the rate cut, 17. Okay. September, where are you at? Right there. That's the rate cut. I have this date, 3rd of March. I believe that was DXY's. Let me look at DXY here. The recovery. Ah, yes, that was the low for DXY, then the reversal off the lows would be March 08. Once it gained strength, lots of strength, you start to see a major pullback. Got it. I know what I'm looking at. So we're going to talk about this. I'll label that purple. And I'll label this, let's call this the DXY low. DXY low. And we'll label this here DXY low. Okay. So I won't need that. That's fine. Pull this up. Good. And then this is a bat pattern on DXY. Okay, so here's where I'm going to begin my analysis here. I'll start this story back with SPX. So here's something I want to compare. I have some weekly charts going on here and a couple similarities. There's a couple similarities between 07 and 2024 that are worth noting, okay? And this is, I don't see 07 and 2024 as an apples to apples comparison. I actually see them quite different. But there are some things that are very consistent with each other and something that is worth, pointing out. So as we sit today, this week, first things first, the highs here for 07, and on top is my 07 chart, by the way. So on top is my 07 chart, on bottom is our current chart currently. So I want you to check this out. July 17th, 2007, in the summer, we established our all-time highs. The same week in 2024, we established our all-time highs. And you'll see that here. The same exact week as 07, and now the same exact week here in 2024, we established our all-time highs during the summer. That's the first similarity, the first thing that has caught my eye regarding SPX, just from a chart perspective. That's it. The timing is what I think is very interesting. So the timing of all-time highs in 07 line up with the timing of all-time highs in 2024. That's the first thing. Now, the second thing is, okay, how much did we correct in 07 compared to how much we corrected this year? Now, this year, we had two completely different events. So in 07, what happened is Lehman Brothers collapsed in August. That was the market event that caused this pullback. They didn't file for bankruptcy until September. So on this day, it would be, it looks like August 13th. The week of August 13th, we hit our lows in 07 on the pullback. And that pullback was from our highs about 11%, 11.5% from its July highs. This year, from our July highs, we pulled back roughly, looks like 9.8%. So not quite 11%, but pretty dang close, within 2 percentile, which I think is significant. You know, we didn't pull back 3%, we didn't pull back 4% or 5%, we pulled back 9%. After hitting the same all-time highs, hitting all-time highs during the same exact week as 07. That's why this is so similar. Also similarly, if you look at, there was a pullback in February of 07 in the spring. There was also a pullback in March of 07 during the spring, which I find very, very interesting. The timing of the spring pullback and then the summer rally, and then we had the summer all-time highs, and then the fall pullback going into August. And the low for August was during the week of August 5th. August 5th to August 12th. And then the pullback in 07 was, the lows were established the week of the 13th. Very similar. Then in 07, we had September 17th in 07 was the first rate cut applied. Then in 2024, September 18th, we had the first rate cut applied, same day. So our first rate cut was applied the same exact day. And then you'll see in 07, following the rate cut as expected, we made new all-time highs. Because what was the initial reaction of the rate cut? You have a couple of things happen. You have, generally what happens is you will have things like the dollar pull back a little bit. Let me pull this back here. So what's interesting is leading up to the first rate cut, you had the US dollar, the strength of the US dollar decreasing, which in turn, what that should do for equities is it should send equities higher. Because when you think about it, let's say that you have a $100 stock. When your dollar decreases in value, you have to adjust your equities accordingly. You have to adjust your equities to reflect something higher. So let's say that the dollar decreases, you have a $100 stock, your $100 stock should increase to whatever number to adjust that, whether that's 110, 115, you get the picture. And then as the dollar strengthens, you should see equities actually pulling back. Because when the dollar gains strength, that $100 stock should be worth maybe 95 or 90. So, and the reason I'm bringing up the US dollar is because it's something that was very interesting that happened in 07 specifically. And I'm going to pull that up. Back in 07, the thing that was very peculiar, and I'm going to put DXY on the chart below and SPX on the chart up above. Here's 07. I'm just going to put a couple lines here to reflect some stuff. So it would be September 17th. That would have been the rate cut. Then you'll see March 8th was the low for DXY. And then you'll also see when things went bananas, August. Sorry, not August 8th. When things started curling up, we're looking at July. Starting in July of 08 is when the strength of the US dollar recovered massively. So a couple things I want to point out here is, here's March. This is when DXY hit its low. And the strength of the dollar hit its low. Here's what's interesting. Following the rate cut, which happened in September, right here, notice what happened. As the dollar was decreasing, you should have seen equities continue higher during normal market conditions. What ended up happening, market did go higher temporarily, very briefly. And then DXY lost its lows. And those lows dated back to 1992. Those are very significant lows that it lost. We're talking 03, we're talking 1992, we're talking 1995. We lost some significant levels for the US dollar. And interestingly, this is where things really were, I think, problematic. When you started seeing the dollar decrease and equities decreasing at the same time, someone was lying. Someone is lying about something when you see that type of thing happen. That's not normal. Generally, when you see the dollar decreasing, you want to see equities increasing. And so the problem that the stock market had, in this case the S&P at the time, is the stock market was pulling back going into the spring. It never saw those highs again in October. Started pulling back into the new year as DXY is plummeting. And by the time DXY caught some support at some new lows and consolidated, you finally started to see the S&P 500 slowly curl up and start to bounce. You saw it slowly curl up, start to bounce a little bit, and then when things started to get ugly is when the US dollar started getting some legs under it and ended up going higher. And these are normal market conditions. When you see DXY gaining strength, you would expect equities to continue to go down naturally. And the problem that I saw is with these previous levels that DXY had, there is such a huge upper range to recover off of for the dollar that it really created an extreme an extreme event, even leading up to the stock market crash. Before, the mortgage-backed security thing unfolded, which became our, circuit breaker in October, before we saw the big dump at the end of September. Before all that happened, we already had the strength of the US dollar surging. So this is the thing I want to point out. When the strength of the US dollar caught support and began to surge is when the market started pulling back significantly. And as the market was pulling back significantly, it led up to your black swan event. Okay, your event that no one's anticipating. And the only thing you can go off of is look at what the charts are doing, right? The US dollar is gaining tons of strength going into September and October, and it still had tons of room to go achieve some of its, key support and key resistance levels, previous key support and previous key resistance to the upside, in which we had this massive move in the fall, unwinding the market. Now, I just want to put this in perspective. From the 2002 lows following the dot-com bubble, the retracement for the S&P 500 was 113%, meaning the S&P 500 lost 113% of its value since 2002 during the 2008 and 2009 financial crisis. Let's compare and contrast to what happened during COVID, just so we have an idea of how bad that was and how well we actually pulled out of COVID later on. Now, before I go into the COVID pullback to the all-time highs, I want to point something out that was interesting. December 2018, which was our lows, we get to our COVID highs. I want to show you something. Look at what our retracement was, 113%. We retraced 113% during COVID. Which COVID, that was its own animal, but look at the consistency here. How come we have the same exact retracement from 2018 to 2020 as we did from 2002 to 2009, where we hit our lows? There's consistencies there. And those are extreme conditions, okay? Looking at SPX following COVID, so off the COVID recovery, when we look at how we performed once we achieved all-time highs in 2021, and then there were first signs of rate hikes, okay, to accommodate inflation, right? The first event was COVID. We had 113% correction following 2018. The same exact correction, mathematically, as what we had from 2002 to 2009. It was the same exact one. And then going forward, as we recovered from that, and we made new highs, we pulled back 50%, okay? You see how we had a 50% pullback during a bear market during the time that we had rate hikes. That right there is healthy. That's a healthy pullback. That, in my opinion, I think the market performed very well considering the circumstances with inflation and everything. Considerably well. So where does that bring us today? What does all that mean today as we're making new all-time highs? Well, let's just put it this way. The risk factor is what I care about for now. So what are the risks? What are the risks? And I'm going to pull up 2007 here and then compare it with our chart currently in 2024. And I'm going to look at DXY. So during this entire event, DXY's highs, its resistance here in 2022, also was the pullback in 2022, reflected the pullback of the S&P 500, where we retrace about 20%, or sorry, 50%. Then following that, in July of 2023, DXY found some support after pulling back. Because what happened? When DXY plummeted, what did equities do? When the US dollar plummeted, what did equities do since 2022? They absolutely rallied. They went on a tear. They went on a tear, which is great. So if I pull this up, here's October 2022, the low for SPX. Here's October 2022, the high for the US dollar. As the US dollar came plummeting down, what did the S&P do? Started heading up, heading up, heading up. Where did the S&P peak? In July of 2023. Where did DXY reverse at? DXY gained strength and recovered. What did the S&P do? It pulled back. And a lot of that has to do with seasonality, because between August and October, you have a seasonality aspect where you see a pullback and then you see an opportunity during or after earnings season in October and early November. And then you look to buy the dip, which a lot of us in the Discord did. We had a lot of chart setups. We had this big weekly thrust candle on the S&P, and you can see following that dip in October, where was DXY? DXY was right here and pulled back again. Since then, it's been consolidating. And even during the consolidation process, there's been times where DXY is going higher, and what's the S&P doing? It's going higher. And then, finally, come July, DXY starts to go down. And as DXY was going down, we also had the market going down at the same time. So the thing that I'm pointing out here, and the thing that is a bit of a concern, is the US dollar and the stock market as a whole, equities, are now moving in the same direction, consistently in the same direction, for quite some time now. Consistently in the same direction since about December of 2023. The concern I have with that is the last time I saw that much consistency over a longer period of time was 07. Now, in 07, DXY was going down and equities were going down at the same time. And then by the time DXY recovered and gained strength, the stock market continued lower. So it is a different scenario that we're in currently. But as we hit all-time highs this week, actually today we hit new all-time highs, which is great. I'm all for it. The thing that concerns me most recently is what we have going on with DXY. We have a weekly thrust candle followed by continuation this week. Strength of the US dollar is increasing. And the thing I'm worried about is if the strength of the US dollar goes on a surge. and continues to go on a surge. The thing that I worry about is that the S&P tops out, and as the US dollar continues to surge, the risk is that equities start to head lower and start behaving like they're supposed to be behaving relative to DXY. Historically, DXY and equities perform in the opposite manner, in the opposite direction, especially when we're looking at like weekly charts, anything more long term. So the fact that for a long period of time, since about December 2023 now, DXY has not been performing in the opposite direction of the S&P, or vice versa. The S&P has not been performing in the opposite direction of the strength of the US dollar. One of the things I have is, yo, what's up, Abe? Good to see you, man. And then Colin, I'm going to answer your questions here. You said, when will the US presidential, let's see. Oh, so the election ends. So November 5th is election day. And then they got to get the results, and then the inauguration should be January 1st or sometime in January. I don't know the exact date. I can't remember. I know it's in January. So the thing that I'm a little concerned about is if the strength of the US dollar surges, that equities at some point hit their top and come flying down as the US dollar surges. That's the thing that I'm concerned about. That's the biggest risk I see. We're in it's totally different circumstances than 07. It's not apples to apples whatsoever. Anyone who says that doesn't know what they're talking about. The only thing that is consistent with 07 is the timing of some of the events that have happened. So like the first rate cut, the all-time high during the summer of 07, like I had on the chart here. So if you look at, here's 07, here's the first rate cut, here's the all-time high, and then this is what happened following that all-time high. By the way, this is the same week we had our all-time high in 07, which is another just wild thing to think about. So keep this DXY chart in mind. We have a lot of room to go to the upside for DXY, as DXY is showing some strength. And so if I look at the S&P's chart today, currently, this is where we're at right now. And the question is, where do we go from here? Do we close lower this week? We still got 2 days left of the week. If we were to just like dump for whatever reason, we'd have a pretty similar candle as the one in 2007. So best case for bulls is we remain at the levels we're at. We have a strong close this week, and we continue to see the market continue higher. Now, the problem that happened in 07 is, you had all-time highs in October, the same week we're in right now. And then the following week, we had this huge bearish engulfing candle. I mean, the market just absolutely tanked the following week after those all-time highs. It dropped 4% in a week and closed. It closed down 4% in 07. So the thing I'm really curious about is, what do we do in the next few weeks going into earnings season? Let's see. Abe says here, in order for the dollar to continue higher, it needs to hold the lows on the next PB, which is going to happen soon. DX is diverging. Yes. For me, my key support level on the dollar is about 100. Somewhere around the 100, which we have bounced off significantly. So under normal conditions, even though '07 was not normal because we had DXY falling to new lows and we had equities falling at the same time. Those were not normal conditions. So there was already something in the works in '07. But the problem is when in '07, when we continued to dump lower, it was by the time DXY hit its lows, recovered, and then absolutely ripped, and equities had nowhere to go. Really, it's they kind of equities really had nowhere to go um naturally, and then you had this event that happened going into September, end of September, early October. I can't remember the exact date in October, but that's when you had your circuit breakers. So that was October of '08. So that's the thing I am a little concerned about right now. I am concerned that if the US dollar gets some legs under it, which it is currently, and if the market reacts the way I would expect it to when the strength of the dollar increases, we could be in some trouble. Now, does my bias want that? No, not necessarily. I want my portfolio to continue to do well, and I want everyone's retirement accounts to continue to do well, but that's what I see as the posing the biggest risk just from a chart perspective. Um just from a chart perspective. Now, one thing that's also interesting, someone brought up gold a while ago. I'm just curious if I were to look in '07. So we were looking at, so gold did a breakout in '07. So when rate cuts were applied, gold did a breakout, made new highs, continued to run higher. The market continued to actually started to pull back, especially once we broke the all-time highs for gold. The market continued to pull back. And the interesting thing is by the time March came around, gold knifed as DXY pumped and caught its lows. So gold knifed when DXY caught its lows. And then in July, which was the timing in '07, in July of '07, when DXY made its run, it made a huge run. The US dollar made its run to the upside. You saw gold start to dump, and you saw the market dump with it. So that's why I think that, another reason why I think not only looking at gold, but also looking at the strength of the US dollar, I think in relationship with gold is very interesting. And we see how gold started to dump when DXY, the same time in July, of '08, equities started to dump. So equities dumped with gold while DXY started pumping and went on its rally. And gold, dumped with equities going into October of '08. Now, the interesting thing with this pattern I have for gold, this pattern completes up at 248.86, and recently gold came up short of that to 247.33 roughly, so just over $1 and 50 cents. Came up short of my target, and now gold is pulling back. And while gold is pulling back, DXY is pumping. So this is something that is starting to worry me, because the same thing that happened, DXY gaining a lot of strength with room to go to the upside, lots of levels to test to the upside, and then DXY hitting gold was at all-time highs when it did its major pullback and its run. that's one of the things I have concerning with gold and DXY. And as we saw with gold in 07, sorry, 08, is when gold started to pull back, DXY started to pump, equities also followed suit with gold. Let me see what Abe's saying here. Metals and DX have more inverse relationship to each other than equities does with the dollar. Metals and mining. Let's see. So do you, for your metals and stuff, are you following like metals and mining, like the ETF, or what are you looking at? Are you looking at specific metals? So like I think XME is the ETF. I want to say XME is the ETF for metals and mining. So you said metals and DX have more inverse relationship to each other. So let me look at XME just as a copper, gold, silver. Gotcha. That's what you're talking about. Copper, gold, silver. So here's the thing I'm a little concerned about. You know, we see DXY, we see the dollar going up, we see gold pulling back. The question is our equities going to follow suit with gold? Or are equities going to continue to go higher while gold is pulling back? Because in 08, they both ran together while DXY went in the opposite direction when it was time. When it was time for the US dollar to gain its strength, you had gold and equities pull back. So my question today is, and this is to myself in general, if DXY is going to go up, will gold and XLB, oh yeah, XLB for materials, that's a lot of your, yeah, XME is miners, XLB materials, I thought, or metals. Yeah, metals falls under materials. So that's one of the things I'm looking at right now. This is the first week that gold is significantly pulling back following its resistance the last 2 weeks. We have DXY screaming to the upside. So one of the things I'm concerned about equities pulling back. I am. Looking at 07 is a good example. I could look at really any year, and you know, you see similar behavior for the US dollar, gold, metals like Abe is talking about, and then your equities. So as we approach earnings season, especially, that's the other factor too, is, you know, earnings season ends in end of October, early November, generally for the big companies. And generally that's the time when I want to like buy something, is following earnings, buying the dip, adding stuff to my portfolio. And so what'll be interesting is, one, our earning seasons good? Are they good? Number two, does the equity market continue to pull back? And does DXY, the US dollar, continue to go up? And does gold and metals start pulling back now after achieving these incredible, all-time highs after this run? I mean, what a fantastic run gold has done, and I'm sure others have done well too, but just an example, in 2022, since then, you know, gold is up 64%. That's fantastic. Absolutely fantastic. All right. Let's see here. Let's look at I'm gonna look at a couple charts here. Abe, I hope things are going well. How's the charting going? I'm curious what's on your What's on your platter? What you've been looking at? The other thing that's interesting too that I've been following is been following the 10-year. I had this anticipated crab pattern completion. We've already exceeded my target on the 10-year. We're still screaming to the upside. So you got your government bonds, your 10-year going up significantly since our bottom following the rate cuts. That's another thing. Let me see something here. US dollar JPY, the Japanese yen. This is another interesting chart that I have here. I have a head and shoulders pattern I had drawn. It's on the weekly chart. Starts back in January of 23. This reversal here was anticipated, and we hit my level right off that level, and have screamed to the upside here. And I'm looking for resistance on US dollar JPY between 150 and 151.94. Those are kind of the levels I'm looking for that. Okay, the 30-year. We also got the 30-year bonds. Same thing. Same type of setup. Still doing well there. Let's see. Abe said, what did Abe say? SPX went 700% today. Nice trade, man. That's awesome. I bet that made your day. That, I'll tell you what, that price action, the beginning of the day, was so solid. That's probably some of the best price action I've seen for SPX or SPY in a while. It just went straight up. It just kept grinding and grinding and grinding. It was fantastic. One thing I did notice today too is, so VIX, in the group we were anticipating this flush for VIX to take us to our weekly lows, or sorry, our previous week high down at 2075. That's where we found support. And that is one thing that I'm looking at. I'm watching the previous week high on VIX down at 2075 a lot right now. Because if it does hold support there, we'll have plenty of room and plenty of levels to test to the upside going into tomorrow, Friday. So one of the things I think about is, with this CPI tomorrow morning at 8:30 Eastern time, was today kind of like the buy the rumor? Are we going to have a buy the rumor, sell the news? Or are we just going to continue to scream to the upside? I'm sure we could do that too, right? The market can stay irrational longer than we can stay solvent, as they say. Wow, those contracts, Abe, went from 2.8 to 24. Ahmed, what's up, Ahmed? Good to see you, man. Ahmed said, thoughts on Wolf or Chinese tickers whenever you get a moment. Yeah. Let's talk about that. So on my chart right now, I have BABA. So this crab pattern, I had this drawn as well as a couple other patterns for BABA dating back to around July, first or second week of July, as a possibility. So BABA has actually ran probably, what was it, 53% since I first charted this. I'm very ecstatic about it because it went and completed a crab pattern. The thing with this pattern here is when your pattern completes for a harmonic, I have this red arrow drawn to this specific level for a reason. Because when the pattern completes, you look for a standard 38% retracement that's drawn from this C point down here all the way up to the pattern completion. And that's why my arrow takes us down to $100.32 for BABA. So I think at a minimum for Baba, before I want to, you know, test my luck with anything else long term, I'd like to see a pullback close to this resistance level back from July of 23. It's near 102.50. It's my X point. So I'd like it to go down to there, test that. I'm okay if it goes down to the 38% retracement down at $100. And then if it can reclaim that and reclaim that 102 level, I wouldn't mind going long again on Baba. I would not mind that. Now keep in mind, Baba does have earnings on the 14th of November. So that will be coming up. Some other Chinese tickers. Well, you first mentioned Wolf Speed. I'll take a look at Wolf, and then we'll look at some Chinese tickers too. Let's see. So Wolf Speed, I'll tell you what, man. This is one of those companies I'm not gonna lie, like I've started to load up on. And it hasn't been until recently that I've done that. I've accumulated some shares a few 3 weeks ago, 4 weeks ago. So somewhere in the $8 range, $8, $8.50 range is kind of what my average is right now. I do like Wolf Speed. I do know people that know quite a bit about the company, and I think the price is pretty dang good. And I know, Abe, you know Katie in the group. Katie knows quite a bit about Wolf Speed. So, as of right now, as far as charting is concerned, the chart doesn't look good. It looks ugly. But what you can gather from it is the lows that it's been establishing around 780 is previous resistance back from 1995 and previous support from 1999. So you know for a fact that these are great levels. As far as an opportunity goes, I'd much rather buy here than anywhere else you've seen prior to on this chart. So without really having to chart much with this, because there really isn't anything I can chart at the moment other than just the straight up support resistance from these historical levels. Anywhere from 780 to, 850 or above, in this $9 range, 930, 940, I think it's at a good price. If you're looking for a long-term hold, I do think that it's very attractive. Very attractive. This is one of those tickers you could put, thousands of dollars in, sit in it for a decade, and I'm pretty sure it's going to do very well, especially grabbing it at these prices. I like it personally. Now, if we look at, I want to look at Baidu, which is another Chinese ticker, BIDU. I had a bat harmonic that completed down here at $79. Alerted this back in August. People were starting to talk about Chinese tickers, etc. Baidu has completed a 38% retracement, the standard retracement following a harmonic pattern completion. And the thing that has happened so far is we have broken above my 38%, which is above 109.21. So for a sustained move to the upside, we really got to get above 109.21 again. Otherwise, this is going to be trading down here again. So my thoughts on Chinese tickers in general, looking at Baba, looking at Baidu, I think this short-term move is done. I think we're going to see some consolidation. And I'm going to look for some validation to get above certain levels again. Before, and I talked about some of those levels for Baba earlier. For Baidu, it's really above 109. 109.21. I need to see a sustain above that to open up something to the upside. That's what I'd like to see. Let me see if I can find anything else with this one. No. That's fine. JD. JD. Oh my gosh. That's pretty damn textbook right there for the ABCD pattern. Holy crap. Actually, no. No. It's not. I stand corrected. What did I have there? 1, 2. No. Joe mentioned CEG and NVO. Yeah, I can take a look at those too. JD, you know, based on this, I would say this would look like 1414, somewhere up at $50.50 for JD. I would say this, JD is holding this resistance level as support now. 41.95. If JD can hold 41.95, I think JD has in store $50. I think $50 should not be a problem. If 41.95 holds, let's go to $50. If it doesn't, I think the thing will break down back to maybe $35 again. Maybe even lower. So that is something to watch for JD. Now Billy, B-I-L-I. That was just a wicked rejection. Billy's another Chinese ticker here. A lot of people like to play. Nah, I personally don't like that chart. Okay, this one's wild as hell. This one surprised me, honestly. PDD, I had this harmonic drawn to the pattern completion down in August at our lows. This is called a butterfly pattern. And I only expected a 38% retracement. My God, this thing absolutely went nuts. Since my alert in August, PDD went as high as 77%. It went 77% off the pattern completion. That one blows my mind. That one was so impressive. I know some people that held shares and they held it to, 112. I think they took it from like $90 to 112 or something like that. Maybe a little bit higher. And that thing absolutely went nuts. Very impressed with that one. That one was very impressive. Let's see here. I'm going to look at CEG. I believe that's Constellation Energy. I believe that falls under utilities. Yeah, that's one of the top holdings for XLU. here. What a move. My God. That is absolutely wild. The skyscraper mentioned Neo, and then also you said more impressive China move was TIGR. Ooh, I have not looked at that one in a long time. I'm gonna have to take a look at that. Sounds interesting. TIGR. Cool. So, speaking of constellation energy, who is the one that asked that? I think it was Ahmed. Nope, Joe. Hey, Joe. So, constellation energy, Joe, just completed what's called a crab pattern. And what we are going to look for is a 38% retracement, standard retracement from the C point to the pattern completion. We're currently at the 236, which is at 260. And we're going to look for continuation down to 243.79. That's the standard 38% retracement that I'm looking for. If I wanted to buy the dip, that's where I'd want to buy it. If we lose the 38 fib, if we lose 243.79, there is risk to go lower down to 216, which is the 618. By the way, guys, anything that I'm charting here on YouTube, if there's anything you'd like me to chart, or if you'd like me to post this on X, just remind me on X one of these days. Just remind me to post it sometime. And when I get a moment, I'll do it. I'll post it there so that you guys can have it. All the stuff that I do post, I do have it in my Discord, in the pre-market group. It's accessible to everyone. I do share my TradingView links to all my charts for people in the pre-market group. So if you do want access to all the stuff I do post, it's available in there if that's something you're interested in. Otherwise, just request on X one of these days. It doesn't have to be tonight, but just request on X. I can post them. But as far as CEG is concerned, we're sitting at 260. Nice support here, at this 236 retracement. I'm looking for 243. 243.79. If we lose 243.79, then I think we flush closer to 216. NVO. Let's look at NVO. It's been a while since I charted this. I better clear my chart. Oh my gosh. Dude, I see a head and shoulders pattern. Am I the only one? Can't be the only one. That looks brutal. I'll just target 105.81 since there's resistance there. That's what I think. NVO, Novo Nordisk, weekly chart, trading below the lower trend line. I'd expect us to flush towards previous resistance back from November of 23, somewhere near the 105. 105 or 106. And it could slip lower down to 94 area. Interesting chart. I'll have to add that one. Definitely worth watching. Baba bullish sequence of 130. How does energy look like? A name like PSX is looking good while others don't look as nice. Any thoughts? So we'll look at energy, then we'll look at Neo, then I'll take a look at TIGR. So my sector watch list here, I got just over 400 some tickers that I watch routinely. Those are the top holdings in every sector. I do have access to that watch list in the Discord as well, for anyone that's in that. And there's a weekly trial if you guys want to check it out. It's in there. But I do share the TradingView links to all of those. So as far as my energy watch list is concerned, let me go find it here. I know you mentioned PSX, which is one of the top holdings of XLE. Hmm. The hell? What was this? $886? No, that's crazy. Hmm. Oh, that's kind of interesting. Maybe an inverse. Kind of looks like an inverse head and shoulder. Just at first glance. What do you think about that? It's like my knee-jerk reaction to that one. Sort of looks like an inverse head and shoulder. Huh. So PSX. Ah, I'd say PSX looks like an inverse head and shoulder at the moment. Now, as for the rest of the energy sector here, I'll look at a few others. I know some of them I have drawn. Do a fresh chart. CELH. Damon, I see your request there. Do the daily here. $42%. Anything below a 618 retracement, I have to consider for a bat pattern. So VLO, Valero, I'd say watch for a bat pattern. We got a nice weekly candle so far. Actually pretty impressive. Neckline resistance. Again, anything I'm charting here, if you need a copy of it or something, just request it on the on X. Unless you're in the Discord, you can remind me in the Discord too. I'll do my best to upload those. The Valero looks like a bat pattern. Let's look at Marathon. Marathon absolutely dumped last week. Just insane. Really bad. It was, I mean, that was terrible. I can't remember what happened. There was a big move that happened. There had to be some type of news. At first glance for Marathon, I don't see anything that stands out as far as a pattern is concerned. Oh, actually, Waste Management might have something. Let's see. Tell you what, Waste Management was a sleeper. I think a lot of people slept on that one last year. I mean, this thing went nuts. I had this pattern drawn for Waste Management in October following its earnings, and some of us played it. This thing went nuts. I mean, my target was at 192. It was a 22% implied move. The thing ran 43% before it did a major pullback. Crazy. Absolutely crazy. So Waste Management on the weekly, on the daily, I have a bat pattern. We're testing the neckline resistance here at 212.68. So I think above 212.68, watch for a breakout for Waste Management. Kind of like that. Waste Management's awesome. SLB Schlumberger. I love saying that name. Look at this beauty. I had Schlumberger as a short back this summer. Actually, spring. I think since I alerted it, it went down 26%. Since then, it's done a bounce there off the pattern completion. So Schlumberger is doing the pattern completion bounce. I think in the short term, one thing you could draw off the C point of this completed harmonic is a shark pattern to the upside. There's a lot of stuff that's in the way of that, but to keep it pretty basic, neckline resistance is at 50.94. Then we have our upper trend line, our X to B upper trend line to watch. Those are the most important key levels in the short term. And that would be a shark. Some of these I'm going to have to update on X at some point and put it in the Discord too. I love saying that name, Schlumberger. So this pattern's pretty cool. DVN energy. This is called a bullish 3 drives pattern. This is where you have basically 2 retracements of either 1.132 or 1.272 back to back, followed by a bullish move to the upside, testing an upper trend line, which is what we've gotten here for Devon Energy. I don't find a lot of these patterns a whole lot, but I really love it when I do, and I think Devon Energy, like I've had this arrow, you can see where this arrow was drawn. It was back in July. I've had this thing drawn since July or June. And we've gone down to our targets here, and we've since bounced. We had a big weekly thrust candle last week. Great move by Devon Energy. That one is something to watch for sure. Chevron, I don't see anything significant on that. XLE, honestly, nothing too significant on that. Other than, short term, it's in an upper parallel channel. It's holding pretty good. EOG still kind of holding whatever pattern this is right now. Might have to just adjust this, bring this up, then extend this. EOG's just been in this holding pattern here. It looks pretty good though. Like overall, I mean, I got it on a monthly chart, so you can see on the monthly, it's just lots of consolidation. I think EOG could have a really nice move. FSLR. So for FSLR, I have a Gartley pattern. It's bearish in nature. And that's what I currently have for some downside potential for FSLR here. I think it's important to add your X to B trend line, get through that, and then your neckline support down here at the B point. Try to get through that too. Abe says Exxon is the one that stands out. Six, 7. Weekly chart for Exxon. Hmm. .57. So I'm going to draw two patterns for Exxon. Weekly chart. One is a bullish pattern. It takes you higher towards 133. One is a bearish pattern. That would assume that we reverse right now, and this would be a shark pattern to the downside. So two patterns, both valid. That's a shark. And then this is an ABCD pattern. So the shark pattern takes Exxon down to 98, 96. And then the ABCD pattern takes you to about 133.69 for Exxon. Abe says, all-time high, brother. All-time high, brother. Look at FANG, Fang. Diamondback Energy. Abe, you're long Exxon with a 0 stop. Perfect. Nothing quite there on Fang. So here's something interesting on Oxy. I'm going to pull up the monthly chart. Something that Oxy did recently that I actually really love is, it was trading within this channel for a long time, many, many months. I mean, since 2022. And since then, we broke below that, which I don't like. But, one thing that's good that came out of that is, just give me one sec. I'm going to try to draw this here. I'm going to extend that. Change the color. There. Now we're in a channel. The thing that I really like that Oxy did for this deep crab pattern I have on the monthly, Oxy pulled back to the 38% retracement. That's the minimum retracement you need to have a really nice projection. In this case, a projection higher. That's like the launching pad. That's like pulling the slingshot back. That level sits at, about $49. It's currently at $53. I think if Abe says Oxy will make new all-time highs before Warren Buffett turns 100 years old. That's awesome. Yeah, the thing I like about Oxy is that 38% retracement. I think these are great levels. I think these are great buy levels. I think the only thing that would dissuade me from buying is if we were to lose, I think, $48. Then we have some more downside ahead of us. I think if we can hold $48, anything above that, I think it's a good buy. That kind of wraps it up for energy tickers. The next one I'm going to look at is, we'll do NEO, and then I'll look at TIGR. So NEO, I had this one charted for a while now. And we had a shark pattern. And the most important level in the short term was this upper trend line that we just rejected recently. That was the most concerning level. We rejected off of it. But I do know that since we had alerted it somewhere around the $4.25 or $4.50 range, it ran about 83%, which is incredible. I know the chart looks like crap, but that's an incredible run it made since September. I'm sure people made some good money on that one. That was good. I think, in the short term, you guys, the key level you don't want to lose is 579. That's the 114 fib. If you lose that, you can go test lows again. You don't want to lose that. Ideally, you want to get above. I think this upper trend line is the most important thing. I'd like to see NEO above the upper trend line, retest the highs from 2 weeks ago or from last week. I think that's up in the 770 area. I'm not sure. It may have gone higher. Let's take a look. Let's see. YouTube is not receiving enough video to maintain smooth streaming. Hey, if you guys are having quality issues on YouTube, just let me know. Sorry about that in advance. I don't know what the deal is with that. Hopefully it gets better. Let's see here. So I think that's Neo in a nutshell. I don't need to really cover that anymore. We just got to stay above 579, make sure we don't lose that to continue momentum. Um, because I am worried that it'll break down as it has in the past. And if you can break that upper trend line, that blue trend line here, break the weekly highs from last week around 770 area, there's a lot more hope for that one. TIGR. My God. What the hell happened with that? Holy crap. I don't even know what to say about that one. I'm not charting that one. That was crazy. That thing went nuts. In September, it ran 322%. That is crazy. Absolutely nuts. CELH. That'll be the next one. CELH. And this one will be the last one for the night. So CELH. Celsius Holdings. Wow. What a move. I think this one's pretty simple and straightforward. I've had this drawn out for a long time now. This is a crab pattern. The crab pattern takes you all the way to 1846. We're currently bouncing off of my 1414 fib extension, which sits at about $28.69. So we technically can complete the pattern here, but I have a feeling this one's going to go lower. I have a feeling we'll continue lower, maybe towards the $18.46 range. Looking at, the historical chart, this is going to be a tough level to break, this $28 range, especially anywhere in the 26 to 20, about 26, because we have some good historical support there. So I think it's going to be really tough for it to go lower, but if, these harmonics play out as they have, it's taken me this far, CELH, since May, following that dump. CELH is down 66% using this harmonic. So will it go a little bit further? I think it certainly could. I think that wraps it up for tonight. I'm going to go to bed. I'll be up for pre-market tomorrow. Thank you guys for joining. If anyone's interested in the pre-market group, there is a 1-week free trial you can check out. Otherwise, thanks for joining me tonight. Thanks for your time. And I'll see you guys in the Discord. I'll see you guys on X. You guys have a great night.